Let me make it live on Facebook also. So we are again back here. So we were discussing the concept of this delisting. Okay. Regarding this delisting, we have already covered some of the provisions relating to delisting. So it may choose to delist either from all the stock exchanges or from any of the stock exchanges. And there could be two types of delisting, voluntary and compulsory delisting. Neelam, बोल दो ज़्यादा जोर ना बजाए, खड़खड़ बहुत ज़्यादा मीटिंग चल रही है। This voluntary delisting. So delisting of equity shares of the company voluntarily on the application of the company, and compulsory is by the stock exchange of the company. Now from all the stock exchanges, if you want to give to delist from all the stock exchanges, then you have to provide an exit opportunity to the public shareholders. And if in case you want to delist from one or more of the stock exchanges, then if you want to continue to get to be listed on one or the other recognized stock exchanges, then you exit opportunity need not be given, because the shareholders still have the opportunity to trade in the shares. And if the shares are delisted from one or more recognized stock exchanges, but continue to stay listed on any recognized stock exchange not having nationwide terminals, then exit opportunity needs to be given, because actually the shareholders who have subscribed to the equity shares of your company, they should be at least able to trade in the shares. So naturally, in case it is listed on nationwide trading terminals, then no issues. But if it still continues to remain listed on one or more of the stock exchanges, but those stock exchanges do not have nationwide trading facility, then in that case also you have to give them the exit opportunity. This all we have already studied. Then we studied about in case no exit opportunity is to be given, board resolution has to be passed, public notice has to be given, and application has to be given to the concerned stock exchange. They will reply within 30 working days. And this fact of delisting, it is to be disclosed in the first annual report after delisting. This we have already studied. Now, in case exit opportunity needs to be given, so then in that case, you have to obtain prior approval of the board. You have to obtain prior approval of the shareholders by a special resolution passed through postal ballot. Then the number of votes cast, it should be at least 2 times the votes against. And application, you have to apply to the concerned recognized stock exchange for in principle approval. And audit report is required under regulation 55A of SEBI depositories and participants regulations. Although this is not in our syllabus, but still you have to read some of the provisions covering a period of 6 months prior to delisting. And then you have to make a final application to the concerned recognized stock exchange within 1 year of passing of the special resolution. So this all process it has to be completed within 1 year, and a proof that an exit opportunity had been given needs to be given. And then application to be disposed of by the recognized stock exchange within 30 working days. So there is time bound mechanism for each and every regulator or authorities involved. Then in case of compulsory delisting, the stock exchange may by order, it may delist the equity shares of a company. And the decision of delisting shall be taken by a panel to be constituted by the recognized stock exchange. And before passing an order, the recognized stock exchange shall give a notice in at least 2 newspapers, giving a time of 15 working days within which representation may be made by any person aggrieved by the proposed delisting. And before passing of the order, the company shall be given a reasonable opportunity of being heard, and recognized stock exchange shall consider the representation made before passing the order for compulsory delisting. And after passing an order, the recognized stock exchange shall give a notice in 2 newspapers stating the fact of delisting, name and address of the company, fair value of the equity delisted, etc. Now, what are the rights of public shareholders? The recognized stock exchange shall appoint an independent fair valuer to determine the value of the equity delisted, and the promoters shall acquire the shares from the public at the fair value determined by the valuer, because it has to be a fair play. It's not that the shareholders first subscribe to your company, then your company grew, and now you want to throw the public shareholders. It's not done. So a valuer has to be appointed, and the recognized stock exchange will appoint an independent fair valuer to determine the value of the equity being delisted, and the promoter shall acquire the shares from the public at the fair value determined by the valuer. So this valuer has to be appointed by the recognized stock exchange. And consequences: the whole time directors, promoters, and the companies promoted by them shall not be directly or indirectly access the securities market or seek listing for a period of 10 years. Earlier, this period was 5 years. Now, this is 10 years. So, it's not that you now want to delist and then you again come to the market. So, 10 years ban is there. Now, listing means the admission of securities of an issuer to trading privileges on a stock exchange through a formal agreement. So primary objective of admission to dealings on the exchange is to provide liquidity and marketability to securities, as also to provide a mechanism for effective control and supervision of trading. Then stock exchanges, they represent the marketplace for buying and selling of securities and ensuring liquidity to them in the interest of the investors. The stock exchanges are virtually the nerve center of the capital market and reflect the health of the country's economy as a whole. Now, listing agreement. What are the clauses? The book closure or record date. So books have to be closed at least once in a year, and at least 30 days gap has to be there between two book closures. Book closure, as we know, is normally done at the time of dividend distribution, bonus distribution, etc., etc. And then you have to intimate the stock exchange at least 15 days, 7 days for demat before book closure, and you have to intimate to the stock exchange at least 30 days before any corporate actions. Then clause 19 for listing agreements. These are the clauses. I think these are all self-explanatory. You can go through these clauses. General overview, report on corporate governance, types of delisting, initial. This I think we have already covered in ICDR. Now, regarding this exit opportunity, we were here. So exit opportunity, it is regarding applicability of chapter 4. So the provisions of this chapter shall apply to the proposal for delisting of equity shares of a company from all the recognized stock exchanges. So first requirement is to open an escrow account. The acquirer shall open an interest-bearing escrow account with the definition of acquirer we have already seen. Acquirer is a person basically who is interested in buying the securities either on its own or in concert with some persons. This definition is given in Substantial Acquisition and Takeover Code. So the acquirer, what he has to do, he will have to open an interest-bearing escrow account with a scheduled commercial bank. Just a minute. Not later than 7 working days from the date of obtaining the shareholders approval and deposit therein an amount equal to 25% of the total consideration calculated on the basis of the number of equity shares outstanding with the public shareholders multiplied with the floor price or the indicative price, if any, given by the acquirer in terms of, we have already discussed what is the floor price and what is the indicative price. Okay. So floor price, if we see, so floor price is the minimum price offered by the acquirer. Okay. And indicative price is the price offered by the acquirer, which is higher than the floor price. Okay. So he will have to open an escrow account, and in escrow account he has to deposit 25% based on this calculation. Multiplied with the floor price or indicative price, whichever is higher. Okay. And acquirer shall enter into a tripartite agreement with the manager to the offer. Regarding manager also, we have already studied that manager is a merchant banker which is registered with SEBI. And the acquirer shall enter into a tripartite agreement with the manager to the offer and the bank. So tripartite agreement between acquirer, manager to the offer, merchant banker registered with SEBI, and bank for the purpose of opening the escrow account, and shall authorize the manager to the offer to operate such account as per the provisions of these regulations. So before making the detailed public announcement of these regulations, the acquirer shall deposit in the escrow account the remaining consideration amount being 75% calculated on the basis of the number of equity shares outstanding with the public shareholders multiplied with the floor price or indicative price, whichever is higher. Okay. 25% you have to deposit initially when you open an escrow account, which is to be managed by 3 persons. And 75% you have to deposit when before making detailed public announcement. Okay. And on determination of the discovered price and making of the public announcement, the acquirer shall forthwith deposit in the escrow account such additional sum as may be sufficient to make up the entire sum due and payable as consideration in respect of equity shares outstanding with the public shareholders. Okay. Now, escrow account shall consist of either the cash deposited or a bank guarantee. So it can be either in the form of a cash. Sometimes question is being asked on this. Okay, what could be the mode of keeping the money in escrow account? So it could be either in the form of cash deposit or it could be in the form of a bank guarantee. And this bank guarantee has to be in favor of the manager to the offer, or it has to be it can be a combination of both, means cash and bank guarantee, partly in cash, partly in bank guarantee. Where the escrow account consists of a deposit with a scheduled commercial bank, the acquirer shall, while opening the account, authorize the manager to the offer to make fund transfers through electronic mode, because funding has to be done by the acquirer and this amount has to be received by the shareholders whose shares are delisted. Okay? Whosoever apply to the offer. Because it is an exit opportunity, shareholders may choose to remain with the company despite being delisted. That is also an option. So the acquirer shall, while opening the account, authorize the manager to the offer to make fund transfers through electronic mode or such other mode permitted by RBI, and to instruct the bank to issue banker checks or demand draft for the amount lying to the credit of the escrow account for the purpose mentioned in these regulations, and the amount in such account, if any, remaining after full payment of consideration shall be released to the acquirer, because it is the acquirer who provided the funds. And suppose this escrow account, it consists of a bank guarantee. Such bank guarantee shall be valid till payments are made in respect of all the shares tendered. In case of failure of the delisting offer, 90%, 99% of the amount lying in the escrow account shall be released to the acquirer within 1 working day from the date of public announcement of such failure. Because this delisting offer may be a failure also. Nobody may opt for delisting. Nobody may respond to the offer. So in case the delisting offer fails, then 99% of the amount shall be released to the acquirer within 1 working day from the date of public announcement of such failure. And the remaining 1% amount lying in the escrow account shall be released post return of the shares to the public shareholders or confirmation of revocation of lien marked on their shares by the manager to the offer as per the timelines provided in these regulations. Then detailed public announcement. We read about initially about initial public announcement that okay, this is the acquirer and they want to delist. Now is the detailed public announcement. The acquirer shall within 1 working day from the date of receipt of the in principle approval, because they have to first obtain the in principle approval from the recognized stock exchange. Now suppose this in principle approval is received. So the acquirer shall within 1 working day from the date of receipt of in principle approval for delisting of equity shares from the recognized stock exchange make a detailed public announcement. And this detailed public announcement has to be made in one English, one Hindi, and one vernacular, same as the case of initial public announcement. The detailed public announcement shall contain all material information, including the information specified in Schedule 1, and shall not contain any false or misleading statement. So it shall also specify a date, being a date not later than 1 working day from the date of the detailed public announcement, which shall be the specified date for determining the names of the shareholders to whom the letter of offer shall be sent. So it can be, they will all this detailed public announcement, because public is already aware that delisting is going to take place. They have already made an initial public announcement. Now this detailed public announcement, it also will specify the date, being a day not later than 1 working day from the date of the detailed public announcement, which shall be the specified date for determining the names of the shareholders to whom the letter of offer shall be sent. They already have the names of the shareholders, but why this public announcement? Because it might have changed, some shareholder might have died or something like that. The detailed public announcement shall be dated and signed by the acquirer. Explanation. If the acquirer is a company, this DPA shall be dated and signed on behalf of the board by its manager or secretary. So this manager is different from the manager to the delisting, or secretary if any, and by not less than 2 directors of the company, one of whom shall be the managing director where there is one. Letter of offer. This acquirer, so there is a timeline. This timeline you will find. We will also provide you the timeline in the group. So this acquirer shall dispatch the letter of offer to the public shareholders not later than 2 working days from the date of the detailed, because all this process has to be completed within 1 year. We have already seen that. So 1 day for shareholders' names, 2 days for this dispatching the letter of offer. Okay? And letter of offer shall be sent to all public shareholders holding equity shares of the class sought to be delisted, whose names appear on the register of the company. Because how the manager will come to know? They will come to know through the register of the company or depository as on the date specified in the detailed public announcement. And it cannot be later than 1 working day from the date of detailed public announcement. And a copy of letter of offer shall also be made available on the website of the company and the manager to the offer for the benefit of the public shareholder. The letter of offer shall contain all the disclosures made in DPA and such other disclosures so that the shareholders can take an informed decision whether to opt for this offer or not. The public shareholder shall have the right to inspect all the documents as referred in the letter of offer, and the manager to the offer shall facilitate the inspection. And the letter of offer shall be accompanied with a form for the use of public shareholders for the purpose of either creating a lien or tendering the physical shares as the case may be. An eligible public shareholder may participate in the offer for the delisting of equity shares and make bids even without receiving the form or letter of offer, and such shareholder may tender shares in the manner specified by the board in this regard. Now, how this bidding takes place? Okay. This bidding period, it will start not later than 7 working days from the date of the detailed public announcement, and it shall remain open for 5 working days. Okay. So within 7 working days, the starting has to be done within the 7 working days. The bidding period shall start not later than 7 working days from the date of the detailed public announcement and shall remain open for 5 working days. अब ये detailed public announcement में क्या होगा? Detailed public announcement bidding है यहाँ पर, ठीक है? They have already given the floor price. They have already given the indicative price. Now they have to bid. These shareholders have to bid. The acquirer shall facilitate tendering of shares by the shareholders and settlement of the same through the stock exchange mechanism. Okay. Acha. Manager to the offer shall ensure that the outcome of the reverse book building process is announced within 2 hours of the close of the bidding period. Okay. Bidding period कितना है? It has to remain open for 5 working days. Okay. And within 2 hours of the close of the bidding process, the manager will offer the announcement of the reverse book building process. And within 2 working days from the closure of the bidding period, the acquirer shall, through the manager to the offer, make a public announcement in the same newspapers. So this is the third public announcement. So this third public announcement will be made in the same newspapers in which the DPA was made, disclosing the success or failure of the reverse book building process along with the discovered price. So this is the third discovered price. So first was floor price, then indicative price, and this is the discovered price accepted by the acquirer in the event of success of the said process. Now manner of tendering. क्या होगा इसमें? So the equity share shall be tendered or offered by the public shareholder, including by way of making a lien through the stock exchange mechanism in the manner specified by the board. Now, rights of shareholders to participate in the reverse book building process. So, public shareholders holding the equity shares of the company, which are sought to be delisted, shall be entitled to participate in the reverse book building process in the manner specified in Schedule 2 of these regulations. And any holder of depository receipts issued on the basis of underlying equity shares and a custodian keeping custody of such equity shares shall not be entitled to participate in the reverse book building process, provided that any holder of depository receipts may participate in the reverse book building process under subregulation 1 after converting such depository receipts into equity shares of the company that are proposed to be delisted. Discovered price. I hope I'm audible and visible because the light has gone off. Am I still audible?
Yes, sir. Perfect.
Okay. Discovered price. After fixation of the floor price under subregulation 2, the discovered price. So this is the third discovered price. Floor price, indicative price, now the discovered price. After fixation of the floor price, the discovered price shall be determined through the reverse book building process. And the manager to the offer, who is a merchant banker recognized by SEBI, he will disclose the same in the DPA and the letter of offer. The floor price shall be determined in terms of regulation 8 of takeover regulations. And the reference date for computing the floor price would be the date on which the recognized stock exchange was required to be notified of the board meeting in which the delisting proposal was considered and approved. Now, this acquirer, it has the option. It shall have the option to provide an indicative price in respect of the delisting offer, which shall be higher than the floor price calculated in terms of sub-regulation. So, this indicative price can be higher than the floor price. Minimum, it has to be the floor price at least, because floor price is the least at which you can offer. The acquirer shall also have the option to revise the indicative price upwards before the start of the bidding period, and the same shall be duly disclosed to the shareholders. Because if the acquirer notices that the people may not respond to the offer unless he revises the indicative price upwards, so he has the option, the acquirer shall have the option to revise the indicative price upwards before the start of the bidding period, and the same shall be duly disclosed to the shareholders. The acquirer may, if it deems fit, pay a price higher than the discovered price determined in terms of. So if the price actually paid may be still more than the discovered price. then minimum number of equity shares to be acquired. An offer made under Chapter 3 of these regulations or a counter offer made by the acquirer in terms of sub-regulation, as the case may be, shall be deemed to be successful. Now, this acquirer is making an offer, but there may be a counter offer also. Okay? Because these people, these shareholders, they are responding to the offer through bidding. Now, another counter offer could be made by the acquirer, and it shall be deemed to be successful if the post offer shareholding of the acquirer, along with the share standard offered by public shareholder, accepted as eligible bids at the discovered price or the counter offer price, as the case may be, reaches 90% of the total issued shares of that class, excluding the following. First is shares held by custodian against which depository receipts have been issued overseas, or shares held by a trust set up for implementing an employee benefit scheme, or shares held by the inactive shareholders such as vanishing companies and truck off companies, share transfer to the investor protection fund, etc. So, excluding these, if the post offer shareholding of the acquirer reaches 90%, then it is deemed to be successful, because now delisting has taken place. After delisting, all the shares should have come to the acquirer, but there is a provision for 90%, because 10% may be held by, say, custodians or by trusts or by some inactive companies. Suppose a company subscribed to the shares initially, it is being still shown as a shareholder, but its name has been struck off, or it's a vanishing company. Provided that such shareholders shall be certified by the peer reviewer company secretary appointed by the board of directors of the company for due diligence. Okay? Explanation is the cutoff date for determination of inactive shareholders shall be the date on which the in principle approval is received, which shall be adequately disclosed in the public announcement. Now, this option to accept or reject the discovered price or counter offer. Now, there is a tussle between the acquirer and those bidding. So, the acquirer shall be bound to accept the equity share standard or offered in the delisting offer if the discovered price determined through the reverse book building process is equal to the floor price or the indicative price, if any, offered by the acquirer. So, it is bound to accept. Okay? Because it is he who has already offered this indicative price, and the acquirer shall be bound to accept the equity shares at the indicative price, if any, offered by the acquirer, even if the price determined through the reverse book building process is higher than the floor price but less than the indicative price. But nothing contained in sub-regulation 1 and 2 shall apply if the discovered price is higher than the indicative price. So there are basically three types of prices. First is the floor price, then indicative price, and third is the discovered price. Okay? If discovered price is higher, then the acquirer is not bound to accept. Okay? In case the discovered price is not acceptable to the acquirer, then a counter offer may be made by the acquirer to the public shareholder within 2 working days of the closure of the bidding period, and all this is being done through the stock exchange. Okay? And thereafter, the acquirer shall ensure compliance with the provisions of these regulations in accordance with the timelines provided in Schedule 4 of these regulations. And the counter offer price shall not be less than the book value of the company as certified by the manager to the. Next. For the purpose of this, the book value shall be computed on the basis of both consolidated and standalone financial statements of the company. The consolidated statements, as we know, are they incorporate the financials of the subsidiaries which are situated abroad. Okay, so both consolidated and standalone financial statements of the company as per the latest quarterly financial results filed by the company. Okay. Now, failure of the offer. So the offer will be deemed to have been failed in the following circumstances. First is the minimum number of shares are not tendered offered as provided in clause this, or if the counter offer has been made by the acquirer. Okay. And the failure of the counter offer shall be considered in accordance with clause A or B, or the price discovered through the reverse book building process is rejected by the acquirer. In case of failure, suppose there is a failure of the delisting offer, the equity shares tendered or offered in terms of Schedule 2, as the case may be, shall be released. Okay? On the date of disclosure of the outcome of the reverse billing process, if the minimum number of shares of the regulations are not tendered on the date of making public announcement, if the price discovered through the reverse book building process is rejected by the acquirer, and in accordance with Schedule 4, if a counter offer has been made, provided that the acquirer shall not be required to return the shares if the offer is made pursuant to Regulation 5A of takeover. So these are the different schedules in which the different types of actions to be taken are specified. And expenses, who will be bearing the expenses related to the offer for delisting shall be borne by the acquirer. Okay? And the acquirer whose delisting offer has failed shall not make another delisting offer until the expiry of 6 months. 6 months from the date of disclosure of the outcome of the reverse book building process under SEBI Regulation 3, if the minimum number of shares are not tendered or offered from the date of making public announcement, if the price discovered is rejected by the acquirer. Then payment. So how this payment is to be made, this you can go through. And the acquirer, he will be liable to pay interest also at the rate of 10% per annum, whose bids have been accepted if the price payable is not paid to the all shareholders within the time specified. Okay? But there could be reasons for delay. In case the delay was not attributed to any act or omission of the acquirer, then the board may grant waiver from the payment of such interest. Then final application to the stock exchange after successful delisting. So after successful delisting, so within 5 working days, you have to make an application to the stock exchange. Okay? The final application shall be accompanied with necessary details, and it shall be disposed by the recognized stock exchange within 15 working days. And then the shares will be delisted. Now, right of the remaining public shareholder to tender equity shares. The remaining public shareholder whose shares either were not accepted or were not tendered, so they have a right to tender their equity shares for a minimum period of 1 year from the date of delisting, because there might be a situation where certain shareholders could not offer their shares. Maybe they did not come to know of the public announcement. So they a period of 1 year has been given to them that they have a right to tender their equity shares for a minimum period of 1 year from the date of delisting. And the acquirer, he will be under an obligation to accept the shares at the same price at which the equity shares have been delisted, and payment of consideration shall be made out of the balance amount lying in escrow account. And manager to the offer shall ensure that the amount lying in the escrow account or the bank guarantee shall not be released to the acquirer for a period of minimum 1 year, or till the time payment has been made to the remaining public shareholders, whichever is earlier. Because as we've seen that a 1 year period has been prescribed to complete this entire process. Then measures to protect the rights of the remaining shareholders. So there is some quarterly reports, then these progress reports, etc., have to be given. Okay. A committee has to be constituted upon the receipt of detailed public announcement. So board of the directors, they will constitute a committee of independent directors to provide reasoned recommendations on the delisting offer. ये सारा इसमें हो जाएगा. ठीक है. ऑब्लिगेशंस क्या होंगे, ये सब हो जाएंगे. वो आप होस्ट जो भी हैं वो म्यूट कर दें जहां से आवाज आ रही है. कहां से आवाज आ रही है भाई? अच्छा, कंपलसरी डिलिस्टिंग. तो कंपलसरी डिलिस्टिंग हो ही गया. ठीक है ना. कब होगा कि भैया कोई कोर्ट ऑर्डर आ गया, कुछ हो गया, ये सब होगा उस केस में. सो फॉर कंपलसरी डिलिस्टिंग ए पैनल हैज टू बी मेड. ठीक है. पैनल में क्या होगा? 2 डायरेक्टर्स होंगे ऑफ द रिकॉग्नाइज्ड स्टॉक एक्सचेंज, one of whom shall be a public representative. Then 1 representative of an investor association recognized by the board, 1 representative of MCA or registrar of companies, और फिर जो एग्जीक्यूटिव डायरेक्टर है या सेक्रेटरी ऑफ द रिकॉग्नाइज्ड स्टॉक एक्सचेंज. तो इस पर क्वेश्चंस में बी फ्रेम्ड कि इसका जो कमेटी होगा उसमें कौन कौन मेंबर होंगे. अच्छा, ये सब हो ही जाएगा फिर, इसका मेरे को खास बात नहीं है, ये स्पेशल रेगुलेशंस है. आई थिंक वी कैन स्टॉप हियर एंड दिस सब्सटैंशियल एक्विजिशन एंड टेक ओवर दैट वी कैन टेक अप टुमारो, है ना. अभी काफी टाइम हो गया डिस्कस करते हुए, तो
जी सर.
यू आल्सो माइट बी फीलिंग बोर्ड, है ना. खाना वाना भी खा लेंगे सब लोग, और क्या.
मैराथन सेशन हो गया सर. अच्छा हुआ.